What's going on, guys? JPA Trades here, and today we're going to be going over the three trades we took this week. The Google call, we got 50%, Meta, we got 135, and Amazon, we got 125. Before we get started, just want to let you guys know, saw that you guys were interested. I got a few DMs about offering classes or anything. So basically, once we get enough people to do a classroom, so like 10 or 15, just going to do a little bit more how I find my trades, a little bit more detailed in these breakdowns. So all you gotta do is click this little join button right here, and then you'll be good to go. If not, I'll still be posting educational videos on here, so no pressure. That's just gonna be the deep dives. So let's get into this. First up, we got Google. So Google 120 calls, we took it 1253. So Google is actually one that I probably shouldn't have taken this week, but it did work out pretty well. So on Meta, but let's go back to Google. So Google, we took right in this range here after that drawdown. So as always, guys, I like to look for where interesting wicks happen to kind of make my levels. So a big wick down to a bounce tells you that, hey, there was someone's order sitting there with a buy purchase on the wick downs. Same thing with the wick ups. That means there was someone with a big sell order there. So like here was a big sell. So just something you can do quick is look for kind of, so like here's a big wick down, so that's a pretty important level to look at. And then just kind of go across looking for, so here's some big activity here. Okay, well, here's right where our buy was. So we kind of bought right at 118.83, the 120 calls. We had a little bit of a drawdown with a little bounce, so I think we might have had like 20 or 30% gain on that wick up there, but didn't sell too many. And then the following day, we had that big bounce up, and we were able to get about 50%. If you held to the next day, it was never much more than 50%, and we kind of walked our way out. But I should have been more observant of this downtrend, not just kind of thinking we'd bounce right away. So Google is actually one of the worst plays we took this week, and you're going to see why when we get to Meta, and why Meta was really a much cleaner idea, cleaner play to take. So let's go. There's the Google calls. Close those babies down. So Meta. So 295 calls. We took at 1209. So first thing we're going to look at, Meta chart. So as you can see, I mean, just real loosey-goosey here. You got a pretty nice uptrend going on since May on Meta. So also you have a pretty nice range building here. So same thing. Look for our wicks. Okay, well, here's a pretty big one. Here's a pretty big one. And these can get messy quick, which is why whenever I'm making the charts and stuff for you guys, I don't really go too crazy. But you see kind of that 179, 279, 278 range. There's some activity. And where do you guys think we bought? So there's 1230. There's 1130. So somewhere between 279, 278, we ended up buying our calls on those big wick downs. And those ones worked really well for us because I believe we got our 50% in the first day on the bounce up at the end. Maybe we only got 35, but I know the opening morning we were just doing really good and was able to get 100% plus. So that was an awesome trade. So you can just be more. I shouldn't have done it for that Google call where I traded the downtrend. There's a pretty easy uptrend in Meta. Should have just kind of focused on our names, which is why I only usually trade 1 or 2 trades a week. But this week we did 3, but still worked. Glad it worked. But definitely Meta was a more textbook case of, hey, here's a pretty easy setup. And you can kind of see, I mean, yeah, I drew this line, but there's another pretty big bounce up. You could kind of break the wicks down further, but the bigger the wick, the more interesting they are to me. So that's just kind of something to consider there. And especially another thing, when you're dealing with multiple positions, I think you noticed this week too, I was selling a little bit quicker because I had more money out in the market. So if you were like, I have one trade, I want to do one trade, that might be where your trading capital for the week goes. Like if you're going to risk 10 or 20% of your portfolio in options this week, you might put that 20% in one, where if we have 3, you got to spaced up to be like 6 or 7% in each one. So you just kind of got to think how you're doing it there. And then last but not least, pull it up, Amazon calls. So 10:13 on the 27th. Go over there, Papa Bezos. So right away you're going to notice pretty similar to Meta. So observable uptrend, right? Not perfect, like I said. And then we'll just space it out. So here's June 27th, 10:30. Okay, what are we looking for? Well, 26, we had a little wick. So here's kind of an interesting spot. Anything else over here? All kinds of tight and then tight consolidation too. But we were mostly just looking for that wick to hit again. Go to the 27th, 10:30, draw down. Definitely could have bought a little bit sooner, a little bit later, but 227.1. We bought somewhere in the 127.67 range. Was prepared for it to go lower, but if I see stuff coming up, I know that a lot of you guys like to get better entries than me, so I don't try to make it like the absolute perfect bottom. I just kind of say, hey, here's where I can get something good going. I like the uptrend. I like the movement. Let's see if we can get something going. And that one just took off right away. There was also good upgrades that day going on, so we bought this pretty early in the day, like I'm saying, 10:13, 45 minutes into market open. Got the funny meme down there. So we were really just looking for that good bounce, quick bounce, and we got it. And it worked great. And you could have done the same thing on Friday where that wick kind of was another interesting zone that it never got down to. And then gap up on, Thursday, then gap up on Friday. Another great move. So definitely the lessons learned, even from myself. I'd like to kind of go back and see what mistakes I made in my trade. Was you can see Google was a downtrend. So one more time. And I did this the other week too, where I was trying to predict. So like it's downtrend, big consolidation, maybe, but realistically we can say it's going down. So same way, let's just clear these out of here. Yes. So we can pretty much say like, okay, that's going down. You can maybe say it's making a wedge, but it might be making a bearish wedge. So realistically, it was probably a dumb idea, or at least we made it harder than it had to be on ourselves by taking this Google call. And yeah, it's working its way back up, but this broader trend line needs to break for us to be in calls again. So I don't know if I'll be foolish enough to try it again, but I'd rather be looking next week at Amazon again, and then Meta still up again. Definitely we could. I mean, Nvidia is always a good one. I could have traded that one, but the premiums tend to be higher, and I know you guys kind of like the cheaper contracts. So you just kind of got to find what works best for you. But definitely the big lessons learned from this video, and for not just you but for myself, is look for where the uptrend is and play the uptrend. Don't make it harder than it has to be on ourselves. Hope this helps you guys out, and let's crush it next week.